So I've just spent the last couple of hours listening to Jeremy Hunt deliver the current budget in the House of Commons. And one of the things that stood out to me that I wanted to get out as soon as possible was this whole idea of the British ISA that he's just mentioned.
And today, following calls from over 200 representatives of the city and our high growth sectors, I will reform the ISA system to encourage more people to invest in UK assets. After a consultation on its implementation, I will introduce a brand new British ISA.
Now, there were rumours about this and there were discussions in the background. I kind of never really thought it would see the light of day, and it may never receive the light of day, we don't know. At the moment, what you're looking at on screen is the consultation document, 18 pages, which I very quickly kind of read through the highlights, and I've actually highlighted some stuff all for you now. And I'm going to go through what we know so far, what could potentially happen with the British ISA, and then also I'll give you some of my thoughts as well. And also, as I'll mention in a bit, I really like your thoughts and comments. Let me know if you think this is a good idea. But firstly, let's just give you some of the high level information here. So the British ISA, the whole point of the British ISA is that UK investors like you and me are kind of incentivized to invest into UK listed stocks and shares. So UK listed companies, which are kind of much unloved by most of the market, including lots of very small companies and who may do well in the future, who knows, but at the moment who don't seem to get a lot of love. So the idea is that you create an incentive pot for people to be able to put their money in tax-free and invest in UK companies. So from a high-level perspective, the British ISA would sit alongside the rest of your ISAs. Now, for those of you who know your ISA accounts, you've got a few different ISA accounts in the UK with a current limit of £20,000 that you can put in across all the different ISAs. So you've got your cash ISA, you've got your innovative finance ISA, you've got your stocks and shares ISA, you have your lifetime ISA, and then you would have this new one, your British ISA. I know, to make things even more confusing, it just, it's beyond me. I wish there was a simpler way. Now, on a positive note at the moment, they're looking at the limit of the British ISA being £5,000. That £5,000, rather than being part of the £20,000, is going to be its own £5,000. So it will be £20,000 plus £5,000 of the British ISA, which is, I suppose, good news at least. I never thought it would be too much of an issue in terms of limits. Most people will never get anywhere near trying to save £25,000 a year. So to be honest, this £5,000 in a British ISA is probably more leaning toward those of you who have quite a bit of money really and don't necessarily need any more tax-free savings things, because to be honest, there's plenty of stuff in the UK that you can save tax on. Now, one thing worth pointing out here, that this British ISA isn't something that's all of a sudden going to come in the new tax year. In fact, this consultation document says here specifically that responses to the consultation should be sent to the Treasury by the 6th of June 2024. Now, I'm very much up for, if you guys want to, if you want to comment below and kind of like each other's comments and tell me what you think about it, whether that's pros or cons, all your opinions, I wouldn't mind collecting some of the best and worst of those ones, I guess, depending on which direction you swing, and sending it along to this email address as part of my kind of the community here on YouTube. So I'll very much be up for doing that. But if the only doing consultation up to June, I mean, the government might not even be in until then, I can't see this even happening until the start of next tax year. So it's not something I would get too excited about, so I wouldn't be saving up money for it, for example, but those are the kind of timelines that we're looking at the moment. So this is the kind of meaty, most important thing about the ISA, and the question is really, what can you actually invest in inside an ISA? So the British ISA, is like any other ISA, is just going to be an account type. Once you're inside the account type, what you invest in really is going to be defined here and yet really to be defined. So they are kind of defining a UK stock as anything potentially listed on the London Stock Exchange, the AIM market, Aquis Stock Exchange, or CBOE Europe Limited Stock Exchange as well. So potentially that covers a huge number of shares. And one of the things that this bit of green highlighted text does raise here, it says, however, it would not take into account the proportion of the listed group's commercial activities conducted in the UK as defined, for example, by source of revenue or location of assets. Now, one thing I've mentioned before in this channel a lot, and many of you investors will already know this, but a huge amount of shares, especially on the FTSE 100, so the biggest companies listed here in the UK, generate about 60% of their income, in fact, a little bit more, outside of the UK. So it's all well and good, a big oil company like Shell and BP, for example, being listed in the UK, but they get their profits from lots of places around the world. So investing in those shares just because they're listed in the UK doesn't necessarily mean you're benefiting to the UK. So I hope that one makes sense. And this point makes clear that they're going to have to kind of figure that part out and work out how they determine that one. One interesting thing here is under collective investment vehicles. So really what they're saying in this point highlighted here is that funds are likely to be okay. So that might be ETF or that might be mutual funds or different unit trusts, for example. that are going to be invested into UK companies. Again, as long as they are invested into UK companies, this looks to be something that they would like to replicate and be okay. In fact, 2.7 here says if a trust, for example, if at least 75% of the value of the investments held by the fund were invested in eligible UK companies. So something like that might be the way forward they go with that one. Now, both bonds and gilts look to be okay, or something that which they don't really have any issue with. Again, as long as they are in UK listed companies. Gilts as well also do help the government. They help the UK ultimately service their debt and provide that debt for public services, for example. The issue you may have does come alive, though, when we talk about cash. So although, as it says here, obviously you need cash to put into the account to buy your investment, they don't want you buying cash-like products. So at the moment in your stocks and shares ISA, for example, with your cash, you could buy a money market fund or a money market ETF, for example, and that could generate and just accumulate money for you and be about as safe as you can get. In your British ISA, it doesn't look like you'll be able to do that, because that would be a nice way around if you didn't want to invest in UK stocks, because more on that one later, because I personally don't really think this one's going to be a good idea. But it does look like that you can't invest in cash-like products. So really this one is just for investing in those trusts and those funds or individual UK stocks, whatever that means at the moment. Now, some other details if we go through the document as well. This applies to all different kinds of ISAs, but they're kind of talking about here saying, should you be allowed to open more than one kind of British ISA? And the answer really is they're not sure. They think it's best to just say you can only invest in one British ISA per tax year to make things simpler. Because it does have a £5,000 limit, I think the point they're trying to say here is that you could have 3 or 4 different British ISAs, and before you know it, you might breach that £5,000 limit of new money going in, and it would be hard to keep track of. So potentially you may be able to open one, or potentially you might be able to open multiple ones, as is going to be the rules moving forward next tax year. So as the current tax year, for example, you can only open one stocks and shares ISA or one cash ISA, but next tax year, you're going to be able to open multiple kinds of the same kind of ISA, which is going to be really good. I think it's a really beneficial thing. But if you are a beginner here, I think this can get very complicated and you might end up even losing track of how much you've got invested where. Now, transfers, because lots of you will be thinking that. You might be thinking, well, I love my UK stocks and shares and I've got a bit of cash sat in a cash ISA, or I've got some cash sat in a stocks and shares ISA. Can I move that into my British ISA? And the answer is probably yes, that will be okay. However, there will be issues here because they're trying to get you away from transferring money, for example, into a British ISA, and then transferring it outside of a British ISA into a stocks and shares ISA. So into it looks to be okay and something they would like you to do, but getting it out, they don't want you to do that. It's okay to realize your gains and sell some shares, that's fine, or return it to cash into your bank account, but they don't want to say that money can go into stocks and shares ISA, because otherwise you could get around the system. As you can imagine, you could put £5,000 into a British ISA, £20,000 into a stocks and shares ISA, and then all of a sudden say, oh, I want to just transfer out my British ISA into my stocks and shares ISA. And like magic, you've got £25,000 into a stocks and shares ISA. So they're obviously trying to avoid that one. But again, because this is a document at the moment, which is a consultation, they're not sure. But it does look like, to me, it would just be maybe one at the moment to make things simpler. And I think that would be fine for most people, but we'll see. So it is a good idea, and what do I think? Well, personally, when I first heard about the British ISA, I was definitely very skeptical of the idea, and personally, I'm not really sold on it. I really don't like this idea that you need to force people to invest in British companies as if they need that support. The global market will buy stocks that it deems have the value, i.e. are growing fast and have the exciting prospects ahead of them. People don't just buy American stocks because they're American. They buy them because they're changing the world and selling globally, growing quickly, etc. The UK market and the global market has defined the price and the value of UK stocks, because anyone from around the world are very much free to buy a share, for example, on the London Stock Exchange. If they deem it to be valuable, they will buy that share. Forcing people to say, here's a bit of incentive to buy UK stocks just because they are UK stocks, in my eyes at least, is a bit weird. I don't necessarily think this will have the value and the goal of supporting British businesses. And I think one of those points, as we touched on earlier, is that so many of those, at least the larger, more quality UK companies, get a lot of their revenues from outside. So they're not necessarily even really a UK company. And then you might say, okay, well, this is really for the companies who generate a lot of their income in the UK. So now you're talking about much smaller companies. And then in my head, when I hear the word small companies, I just think of much more enormous risk. And I think beginner investors especially can get themselves easily into the mentality of just gambling on smaller stocks, thinking and hoping that everything will go up just because they're a smaller company. They have a bigger chance to get 300, 400, 500% returns. So personally, I don't really think this is going to achieve their goals. And there's plenty of other ways to increase businesses' efficiency, for example. There's loads of other things that you can do to kind of stimulate business and make business easier to do in the UK. But forcing people or encouraging people to invest in UK listed stocks just because they are UK listed, to me, just seem a bit odd. But I'll be very, very interested in your kind of opinions on this one. And if you love your UK stocks, this could be good, because if your entire ISA, for example, is filled with UK stocks and you love your dividends, for example, another £5,000 to you, you might think, well, this is just exactly what you wanted. But I do think for most people, this doesn't necessarily make more sense. I would rather they just increase the £5,000 allowance across all of your ISAs, because that has stood still for a number of years now and actually isn't that exciting. Although most people will never breach, to be honest. I'm only preaching to a very small number of people who can ever actually maximise their ISA in the first place. But yeah, the British ISA, a good idea? I'm not so sure, but do let me know what you think. I will happily collect everything and send this back for some consultation for the guys. And I'll be very interested also of hearing what the providers say. If they do want to make a statement over the next few days or weeks, I'll get that one up as well, because I'll be very interested in what they have to say, because they're going to have to administer this, and I'll let you know their thoughts. Anyway, thanks so much for watching. I'll see you in the next video. Happy investing.